Hey guys, today we're going to talk about tax homes as a traveler. A lot of the times we don't really know what's going on. Your recruiter might say something, your tax advisor might say something else, you might read something on the IRS website, and we're just confused. So I'm just going to answer some of the most common questions I've heard from other travelers regarding tax homes, because you guys don't want to get an audit. You don't want to pay your money back, because that can happen, and I know travelers where that did happen before. A little bit about me. My name is Dr. Jonas de Keste. I'm a physical therapist, current traveler full-time. I'm actually currently in San Diego. I'm going to be going to Europe soon for 2 months just during my time off. Figure it. Gotta love the perks of travel therapy. But a lot of this info I actually got from the IRS website, and there's a document that the IRS has where it clearly explains this. And it really shouldn't be a gray area, but a lot of the times there are a lot of gray areas when it comes to taxes because people just don't read the IRS website or they don't ask a tax advisor. But I think it should be simple, but a lot of the times we hear different things. So I'm here to break it down for you guys. Woo-hoo. And what is a tax home? That's the first question. So according to the IRS, it says, this is verbatim, that your tax home is your main geographic place of business. This is the place where you work and do the majority of your business. This could be separate from where you live as a traveler. And the IRS definition of a tax home: the entire city or general area where your main place of business or work is located, regardless of where you maintain your family home. If you regularly work in more than one place, your tax home is the general area where your main place of business or work is located. And typically your criteria, it fits 2 out of these 3 things for it to be a tax home. So you have to duplicate your expenses, meaning you have one expense for where you're doing business and then one expense where you're living as a travel contract, and also maintain business in the area, such as you have a job there maybe for a portion, your driver's license, your car registration, you have bills and other things that you maintain, and also you don't abandon your tax home. So typically you're there for 30 days in 12 months or 60 days in 24 months. And if you have typically 2 out of those 3 things, that is considered a tax home. And it's kind of a little tricky, but it's honestly on the IRS form. You can go through it line by line. And next we're going to talk about the 50-mile rule. A lot of people think there is a 50-mile rule, but it's actually a myth. And there are recruiters sometimes that say, oh, you have to live 50 miles from your assignment and then you can get your tax-free stipends. Well, that's not true. There's actually no such thing as a 50-mile rule, and that's a myth. But typically, in order to get your tax-free stipends, you have to live a reasonable distance from your assignment. So you can't just rent out a room that's 10 minutes from your tax home, or you can't just live at your tax home and work at your assignment if it's 10 minutes away, because then there's no point in getting your tax-free stipends. And it really depends on the area that you're in as well. For example, if you're in New York City versus in rural Kentucky, drive times are very different. And that's why the 50-mile rule kind of wouldn't make sense, because if you drive for 30 minutes in busy New York City during rush hour versus 30 minutes in Kentucky where it's super rural, the times are going to be very different. And next question is we're going to answer is if do travelers get audits? So I've never gotten an audit, but I actually know a handful of travelers that did get an audit, and essentially they had to pay back the tax-free stipends and there was a fee. And I don't know about you, but I don't want to mess with the IRS. So do your things right, keep track of your documents as well. Next question is, are recruiters trained to advise on taxes? Travel recruiters, they're amazing, they're hard workers for the most part, but their training that they get is so little, and most travel agencies don't even touch on taxes, and they're not tax professionals. They might say something, but they're not tax professionals, and remember that. Don't forget that. So if they say, oh, there's a 50-mile rule, oh, this counts as this, blah, 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 and if it's not true, just don't even go with it. Next question is, why do we get tax-free money? And we get it because the government gives us a break since we're duplicating our expenses and we're helping out to work in the medical field. And that's kind of where the stipend comes from, because as a traveler, we get a tax-free stipend as long as you're compliant for your meals and housing. And it's great because then on paper, we get taxed a lot less and you keep more money for yourself. Who doesn't want more money for themselves? And another common question is, how much of a stipend do we get? And this all depends on the area that you're in. There's a website called gsa.gov, G-O-V. So gsa.gov, where you can type in a city and it'll tell you your stipend. And it's really just based off of the cost of living of an area. Because, for example, when I lived in San Francisco, worked a travel contract, the stipend was very high. It was, I think, close to $2,000 after tax per week. And I also worked in rural Illinois, and that tax-free stipend was very low because the cost of living was lower. So that's what affects it mainly. And also, your agency, they have certain guidelines to what's their limit for a tax-free stipend, because you want to follow the rules. Because, for example, if they brought your hourly pay to super low, like $5 per hour, just so they can increase your stipend more, that is not right. There's a term called wage recharacterization, and you don't want to do that, because that's just playing around with your pay, making it too low, because a therapist wouldn't get paid $5 per hour. That's even below minimum wage. And another common question is, can a traveler not have a tax home and get everything taxed? Yes, that would be a local contract. It's possible to take a local contract. Let's say I live at my place in Chicago and I want to take a contract that's 5 minutes away. I would still live at my home in Chicago, and I would take this job and everything would get taxed. I wouldn't get a tax-free stipend. And in some cases that works out if someone just wants to take a job. In most cases, if you're there for the money, it might not be financially worth it because it's just like a permanent job. And these are all of the common questions I get asked about tax homes. So make sure to like and subscribe if you watch this video, and follow me for more travel therapy content. Have a great one. Don't get an IRS audit.